FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
This episode of the Financial Survival Network is brought to you in part by Sandstorm Gold Royalties. Sandstorm Gold Royalties is a different kind of gold company. They purchase royalties on select mining operations and receive a percentage of the revenue in return. Sandstorm now has a portfolio of over 185 gold royalties around the world. See how gold royalties differ from other gold mining investments at sandstormgold.com. That's sandstormgold.com. Sandstorm Gold Royalties trades on the TSX as SSL and on the New York Stock Exchange American as SAND.
Welcome. You are listening to the Financial Survival Network. It's December 10th, 2018. Exactly 3 weeks to go to this amazing year of all years. You know, it just shows, like Yogi Berra said, prediction is very hard, especially when you're dealing with the future. And who would have thunk? But what we're seeing is a market perhaps giving out, stock markets, and a rush for the doors, smart money leaving, earnings perhaps going down. What's that going to mean for 2019? What's it going to mean for precious metals? That's what we'd like to know here over at FSN. And as always, we encourage you to write. The email address is kl@kerrylutz.com. We answer all, and the good ones, which are most of them, a lot of them, I should say, we actually read on the air, or we'll have you on to talk about it. And right now, Jeff Clark is with us. You know him well, Senior Precious Metals Analyst for goldsilver.com. Jeff, welcome back to the show.
Kerry, it's great to be back with you, man.
Hey, so recent article you wrote about gold prices. Don't worry, China's got your back covered, basically. And like lately, China hasn't, other than when I was at the Chinese restaurant not too long ago and had a really great meal, they haven't really done much for me.
That's right. Well, this all started because it's true that the news about China and gold has really subsided. You know, it made headlines a few years ago for a long time, and then it's kind of subsided, hasn't really been in the headlines. And I read a recent report from somebody in the mainstream. I don't know if it was Bloomberg or Reuters or whoever, and they were saying, well, gold imports into Hong Kong are down again. And the author of that article concluded at the end, well, therefore, gold demand in China is down. And I just did not like that. I got upset, and it's like, this is not true. This is not accurate. The thing about the article is it reminded me of the old parable of, the blind men feeling the elephant, different parts of the elephant, coming to different conclusions. The thing is, what the facts that were stated in the article are true. It is true that gold imports into Hong Kong had fallen month over month. Big news. But the thing is, concluding that therefore gold demand is down is actually incorrect. And the article is very misleading. It's incomplete. And it completely misses the forest for the trees, as far as I'm concerned. It turns out consumer demand for gold in China was actually up.
Right.
The Reserve Bank in China actually added to the reserves, the prior quarter. And what the author completely missed, and which I think people have to be aware of, and I think most of your audience already is, even more than this, supposed, gold analyst, is that China imports gold directly into Beijing. They've been doing this for years now. They also allow imports directly by jewelers, by dealers, and at least 14 state banks that we know of. None of this shows up in Hong Kong imports. So for this author to conclude that, therefore gold demand is down in the country is just completely erroneous and overlooks the most obvious point about China, is that they don't want us to know how much gold they're importing. They keep it secret, as they do with many things in their society. But clearly there's more gold going into the country, and there's more demand for gold. look at Chinese withdrawals. So I'm sure you've had other guests on to talk about, withdrawals from the Shanghai Gold Exchange, which are physical withdrawals, which don't come back onto the market. We never see that gold again, and it actually lowers trading volumes in North America because that gold is gone for good. They're not going to sell. They don't buy and sell. They just buy. And Chinese withdrawals, even though they're down from their peak, are still 2/3 of global mine production.
Correct.
So, this whole idea that, gold demand is down in China is completely erroneous, and it overlooks the forest for the trees. I think some of your listeners might be curious to look at that article and look at the last section called A Lit Fuse, and it talks about some data that could really ignite the gold market and just completely overwhelm it just from China alone. China's only one catalyst, of course, but I think it's really true that I'm not worried about the gold price because China's got my back. That's really the case. That's really true.
Yeah. So, and they don't even talk about how much the captive supply in China is. Those mines, they supposedly produced a while ago 400 tons a year, and that just got totally absorbed by China, not for export, nothing. And of course,
think about it. China is the largest gold producer in the world. They have the largest in-ground gold resource that we know of, the best estimates. They don't export any metal, and yet on top of all that, they spent since 2011. China has spent $4 billion in overseas mining projects. In other words, they spent $4 billion looking for gold outside of China, even though they're already the largest gold producer, have the largest in-ground resource, and don't export any meaningful amount of bullion.
Yep.
So that tells you what they think about gold and how important they think it is and how much more they want.
They a Chinese company just acquired, who was it, Nevson, right? Which had a little bit of gold left in Eritrea, but had this huge project. I think it was in Slovenia, I want to say, but I wouldn't swear to it. Huge project, and nobody's talking about that, right?
Nobody's talking about that, and they're investing in a lot of just projects in general. They're not buying so much other producers, although, as you just said, they do that. A lot of this money is money that you and I and everybody else doesn't really see all that much. It's getting put into projects or development, phase assets, junior companies, property, things like that. So they're playing a long-term game with gold. So they're doing what you and I do when we buy a junior gold producer. We buy it to make a lot of money at some point in the future because we think it's an asset that may have, a lot more gold.
Yeah.
They're doing the same thing. So
very, very true. And so the taken in the context of the real world here, they might be gone, but they're not forgotten here. They're not even gone.
Yeah, they're not making headlines, and this journalist who wrote this report is just really missing the forest for the trees, like I said, and I think they're playing a long-term game. This just because they're not in our headlines doesn't mean that demand is down or their interest is lower now or anything like that at all. It's actually just the opposite. And I think, one of the bigger catalysts that could come out of China in terms of gold would be an overnight spike in official gold reserves. They keep adding little bits, but don't forget, in 2009, they made that huge announcement where they increased the reserves by 75% overnight. I think it's obvious that they had been accumulating that all along. They didn't just buy it all of a sudden. And I think that's what they're doing now. They're accumulating more than they're telling us, a lot more than they're telling us. And we'll see another overnight spike in reserves, or we'll see another announcement. And, in the right environment, that could really ignite the gold price. So, all of this is just one catalyst for the gold price, too. When you put this in perspective and look at the big picture of, what's going on in the world, this is just one catalyst. But I think we're going to see a series of catalysts for the gold price, and we'll see major steps up, as the bull market goes on, whenever that starts. So.
Yeah. So,
that's just my opinion, but I think, over the next 2 to 5 years, the gold market is really going to be a lot more exciting, and the price will be a lot higher than it is now.
Well, let's see what happens for sure. So, because these junior miners, they're just dying on the vine here, Jeff. Not a lot going on.
They are, and I am, very long on the junior gold miners. I do think there's going to be a lot of value there at some point, but let's put it in perspective. This is December, right? So this is tax loss selling. So these things have been going down, and they've been going down even more than usual now, probably because, at least for a lot of them, tax loss selling. We see this every year. It's a known phenomenon, so it's not all that surprising. I've actually been trying to take advantage of that. I've been doing some buying of these junior miners over the past 30 days or so, trying to take advantage of the weak prices. Because, again, I believe, and it's just my opinion, but based on my research and my experience, in 2 to 5 years, these junior miners are going to just absolutely soar. So I think that's the place to be in the long term. Is it the place to be in the short term? Who knows? But think about it. Where else are you going to go?
Hey, so when you look
where else are you going to go? The stock market's in a bubble.
Mm-hmm.
Bonds are even in a bubble.
Yeah.
Real estate clearly rolling over now. Everything I read is the real estate market is rolling over. Cannabis stocks are clearly in a bubble. Bitcoin was in a bubble, and that bubble's burst. I don't know where else you go. Cash. I mean, I think cash and gold are the only places you can really go right now.
Yeah, agreed. So, hey, speaking of bubbles, so Bitcoin, I know we talked about it when last we spoke. Now it broke through. I was predicting the crash for a while. I wrote an article about it. In fact, December 25th, saying everybody should sell half their Bitcoin if they haven't already. But now it's really. I said it was going to go down to at least 80% before it came back, which was 38.80. It broke 38.80. So technical support, 90% retracement from its peak would be right around 2,000. Is this thing just going for the dustbin of bubbles? Is that what's going to happen here?
Well, I mean, full disclosure, I'm not a crypto expert. Some guys at Gold Silver are. Including Mike Maloney.
Sure.
He will say he's not an expert, but he does know a lot about this market. He has studied it.
Yeah.
Bitcoin's what, 3,500 as we talk, and I would not be surprised in the least to see it go to 2,000. It could even maybe go lower. The market's, clearly in a downward spiral right now.
Yes.
And as a lot of us have said all along, including you, 80-90% of these cryptos out there are worthless.
The kleptos.
Just like the .com stocks that were, trading at 400 times earnings in the year 2000 and went to zero.
Isn't that amazing?
Same thing's going to happen with a lot of cryptos. So that's going to pull down this market maybe more than it needs to. So I think the crypto market has a long way to go. For me, based on everything I've studied, I think the issue is going to be the barrier to entry. The average person out there, doesn't have there isn't an easy way for them to buy, Bitcoin and all these other ones that are probably going to last. That barrier to entry has to really come down and be a lot easier for the average Joe to just, buy it like a stock. And you can't really do that right now. So I think the industry needs to be cleaned out. I do think 80 to 90% of these things not only will go away, but probably should go away.
Yeah.
And what you're left with will probably be the ones that can develop and move forward, just like tech stocks. Most of those went to zero, but the industry didn't die.
No.
It continued to develop just like the internet did. And I think that probably the same thing will happen with cryptos. The thing is, I don't think it's the place to be right at the moment. It's too speculative. It's too volatile. I do own some, so in full disclosure, I do own some cryptos, but I'm not looking to really add to that position right now. I'm more interested in buying gold and silver. So,
yeah, well, I'm predicting now that there's a major flaw in the system here for cryptos. I think they're all going to zero the current crop because I don't think they can be reprogrammed to defend against this bug because it's not in the blockchain. It's in the nature of the way transactions are distributed, the so-called journal and the distributed journal. And I'm just saying these guys don't have what it takes to really sustain the next all-out attack on cryptos, which could come from multiple quarters. Hey, we've talked, you and I, so many times about currency, the power of a country to print its own money or a currency block like the EU. And they're just not going to willingly give this up, Jeff, right? I mean, they're not going to say, all right, well, hey, the private crypto market works so much better than what we do here. Let's just not do dollars anymore. We'll just transact business in Bitcoin or Ethereum or Litecoin or Raven or whatever it is. And that's just not reality. It's just not going to work that way. And anyone who thinks it is deluding themselves.
Over the long term, history shows that every fiat currency doesn't last.
Yep.
Most have gone to zero, other than the current crop that we have right now.
Right.
British pound, the U.S. dollar, and some of the other longer term ones, they've all gone to zero. So, and even though the U.S. dollar hasn't gone to zero, a lot of people don't know this, but there's been 3 monetary resets just in the past 100 years in the U.S. alone. So that greatly affected the value of the U.S. dollar. So you throw on top of that the fact that the central banks continue to dilute the value of our currency, and even low inflation adds up significantly over time. And you have a recipe for something that's not going to last and will probably lead to a crisis and will probably push gold and silver up all by itself.
For sure. And I think in that instance, gold and silver still are your best defensive tools against it, because even when countries screw up their fiat currency, at least in the modern realm, they come back and they create a new currency, and somehow they get the public to go along, and then it goes along till the next thing. Look at Argentina. How many times are the Argentinians going to get snookered by their government and its money printing, ceaseless money printing capabilities, right? Doesn't it make you wonder? I mean, how many times have we seen that currency, the Argentinian peso, if memory serves me correct, just crash and become virtually worthless? I mean, how many more times does that have to happen? And yet it keeps happening, right?
Yeah, the fool me once, thing, and they don't seem to learn from that, The scary thing about now that kind of makes me a little nervous just as a person, as a citizen, as an investor, is that for the first time in history, all currencies are fiat.
Yes.
There's no currency backed by any commodity standard at all. And up until the current period, there were always some currencies out there that did have some gold backing or other backing. We don't have any of that today. So
correct.
It makes me very nervous when I see the amount of debt that is just spiking everywhere all across the world, and that all these currencies can just be diluted at will by central bankers and politicians. I don't like where this could head, which of course is one of the core reasons we own gold and silver. But it also makes me nervous because the fallout from this, the blow up, could be more extreme than it needs to be.
Yes.
And
could be catastrophic.
when I talk about this, it makes me nervous, and it makes me wonder, do I own enough gold and silver as much as I already own relative to my net worth? Do I own enough?
Maybe it's not possible.
And that's a question I actually honestly ask myself, not because I work for a bullion dealer, but because I'm just a real person who, can look at all these things and see what is likely to play out, especially when you look at history and wow, this is not good. We're not in a good situation. It's very precarious, and the world may not end, but it could get ugly.
Yeah, it could get very ugly very quickly. We've seen it before. We'll see it again in the future. I mean, nothing really changes, let's face it. So gold is definitely the buy, and cryptos you better be careful of, because just because they've gone down 80% doesn't mean they can't go down another 80%. These things, bubbles, these people who are diehard Bitcoin proponents, Jeff, they remind me of the mid-16th century tulip farmers who were, after just seeing all of their wealth wiped out by the tulip bubble bursting, saying, oh, but tulips are going to come back. Look how pretty they are when they bloom. They're coming back, definitely, and I'm just going to increase planting in my field to get even more bulbs because I'm going to make even more money when they go back up. And, even today, the price of tulip bulbs has never recovered to its then glorious heights.
Yeah, very true. Look how long it took the NASDAQ to get back from the tech bubble that burst, Mm-hmm. It took 15, 17 years, whatever it was. And then, it took so long that you have to take inflation into account. So the purchasing power of that recovery had drained as well. So have they even got back to their purchasing power level that they had in 2000? I'm not even sure that they have. So, the bigger the bubble, the bigger the burst, and the longer it obviously would take to get back. So I agree with you 100%. I'm not buying cryptos right now, and I am buying gold and silver.
Yeah, good. It sounds like the proper move. Hey, Jeff, we want to read your work, find out more about you. Where's the best place to catch up with you on the web?
Oh, it's real easy. Just go to goldsilver.com, and you'll see lots of good tabs up there at the top. Probably click on the news page. That's where a lot of my stuff tends to show up. And Mike Maloney just did a recent 2 episodes of Hidden Secrets of Money. If your audience doesn't know, those are very popular movie quality length productions that are 30 to 60 minutes long each. Anyway, he did 2 new episodes of that, and you can find that under the resources tab. Just look for Hidden Secrets of Money, or go to the YouTube channel and you can find it. But those are very worth your time watching. Oh,
for sure. Yep. Great work on Mike's part. Really enjoyed them immensely, and they're so informative, especially if you're not familiar with the hidden history of money in the world today, because it's quite a tale that he indeed weaves. Hey, well, that's it for today, but it's great having you back on, Jeff. And as always, guys, write us. If you've got a question for Jeff, myself, I'll pass it along to him. The email address is kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. If you're listening on YouTube now, please subscribe, like, and share. If you're not listening on YouTube, you're just listening to a podcast, you can share it as well. I found a lot of people really get hooked on the show once they get into it, and we'll look forward to hearing from you. Jeff, it's always a pleasure, and we'll talk to you again real soon.
Great, Kerry. Thanks, and we'll do it again soon.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.